Sears is considering forming a real estate investment trust, or REIT, in an effort to shore up its sagging balance sheet. Sears Holdings is mulling over the idea of putting between 200 and 300 of its U.S. stores into the trust. The department store has about 1,870 locations in the U.S. Sears Canada totals 176 locations. If the REIT goes ahead, Sears would sell the stores and then lease and operate them. It's not a secret that Sears has been struggling. The retailer hasn't had a profitable quarter in more than 2 years. To help us make sense of what's behind Sears' strategy, I'm joined by Mark Satov, founder of Satov Consultants. So, Mark, what was your first reaction when you heard about this strategy from Sears?
Well, just one more sign in the inevitable demise of Sears. I think it's important to decouple the financial transaction that happened from the financial performance and the operating performance of Sears. Essentially, what's happening is they're trying to take cash away from this asset, and Eddie Lempert has really been trying to take cash away from Sears since he bought it. And he's been very successful. And what's interesting is that we all, those of us who are interested in retail and consumers, are looking at Sears and saying they're doing very poorly, but Eddie's looking at Sears and saying they're doing very well. And so I don't see it as much as an effort to shore up the balance sheet as much as an effort to just take more cash out. Because what happens is you get a greater valuation for the real estate than you do for the operating asset. And so he's trying to make sure that he gets the right valuation for the real estate.
Would it change, though, the economics inside the company in such a significant way that they would be able to perform somewhat better?
Well, it depends what you assume. If you assume that Eddie would take the money that he got from spinning off the REIT and pour it back into the operating asset, then sure. But if history is any indicator, he's had lots of opportunity to put money back in, but all he's done over the last 6 or 7 years is take money out. And that's why Sears is where it is. You know, if he would have made different decisions 6 or 8 years ago, I think we would have Sears as a potential contender. They certainly have a lot of strikes against them, but they would have had a fighting chance had they been investing in the stores and in the brand. But I think we will see whatever cash they get out of spinning off the stores going into the hedge fund or the entity that Eddie owns. So.
Now, we were mentioning in the introduction there the number of stores in the U.S., the number of stores in Canada. Do we know about the Canadian properties and the role that they may or may not play in this REIT?
I don't know that. What I know is that in Canada, they've already made moves to get rid of the real estate that has value. And in Canada, the way it had value was they had very low lease rates, which were valuable to the mall owners. So they sold them back. And if you remember, a couple of times they made a lot of money by selling those leases back. So I'm not sure there's that much more value to extract from the Canadian real estate at this point.
Now, you're obviously quite pessimistic on Sears. You said
that's an understatement.
The word you used in your first answer was demise.
Demise, yeah, sure.
You are quite confident that that's the way this particular retailer is headed?
Their same-store sales are down another 7%. Other retailers are moving up. I don't see any future for Sears. They've not been investing in the brand for years. I think it's inevitable. I think anybody who watches retail would say it's inevitable. I don't see any future for them. What's a shame is that they actually have a strong e-commerce presence. They have one of the best e-commerce websites in Canada.
The catalog, you know? Well, what's the difference, really? You've got to move the catalog online.
Well, but what's interesting, though, is that what all retailers are trying to do is have a strong omni-channel presence, which is a way of linking their online presence to their bricks and mortar presence. But if you look at Sears, you would say, wait a second, they have a great e-commerce platform. They probably have a lot of data and consumer relationships. Why aren't they leveraging them? Why aren't they putting them together to create a stronger brand? So that is the one chance that I think they may have, but I think it's too late. And again, they're not reinvesting.
But you're not saying that they're going to become a pure play e-commerce site and sell off all their real estate and be online only, or is that the plan?
I think they could become Eaton's.
What does that mean?
They're not going to be here.
Okay.
I think they're going to become a retailer that we remember as opposed to a retailer that we visit. I mean, today they're not a retailer that many people visit in the first place, but I think in the future it'll be a retailer that nobody visits because I don't think they'll exist.
So you see really this REIT plan as almost a carving up of the estate, Indeed. So to speak,
Indeed.
Is happening already. And
what's interesting about it is that in the short term, these REITs are a great way to get cash out of real estate. In the long term, if the number one tenant or the only tenant from the REIT is Sears, you actually need to believe that either Sears will survive in order for the REIT to have value so that someone is paying rent, or that there's another retailer who's going to take the space when Sears goes goes bust.
How likely is that? I mean,
And-
there's been so many retailers have come in, Target
And I don't, if you look in the States.
Nordstrom has got the
Well, if
Sears
you look in the
location.
States where a lot of the properties are, where the REIT is going to be centered, so the 200 or 300 locations, I'm not sure there are that many retailers who are going to take the space, because Walmart and Target like to build their own boxes. So what I would say is this is a great move for Eddie Lampert. He's taking more cash out of this asset. He's done a brilliant job of that. I'm not sure that I would buy shares in the REIT myself, because I'm not sure that I'm confident enough in the operating viability of its main tenant.
As I say, you are negative on it. Not everyone is predicting such a gloomy fate for Sears.
I don't know who's predicting a positive outlook for Sears, but I've been a naysayer on them for a long time. And again, it's because of the decisions that they've made not to invest in the brand.
All right,
It's no
we'll
longer
see.
relevant.
Thank you very much, Mark.
Thank you.